A lot of us wants to invest in the stock markets, gold, silvers, debt instruments, and other financial products, but are hesitant to start because of the lack of time, knowledge, and the confidence to pick up correct investments. So what is the alternative? Is there a way to invest your money, have it professionally managed, and still participate in the wealth creation journey? The answer is investments through mutual funds. So let's understand what are mutual funds and how do they exactly work. In simple terms, a mutual fund is a pool of money collected by multiple investors, which is then managed by a professional fund manager. And here is how it actually works. Investors contribute money into a common pool. The fund manager then invests this common pool of money into various assets like stocks, gold, silver, foreign stocks, bonds, and other fixed income instruments. The return, whether positive or negative, is then shared amongst the investor. As an investor, you receive units of the mutual funds corresponding to the amount of investments that you've made. Each unit has a value called net asset value. To start off, let me introduce you to the history of mutual funds in India. Though a lot of you may have just started to hear about the mutual funds in a big way, but the history of mutual funds in India goes back to 6 decades, to 1960s, when the first mutual fund was established as Unit Trust of India. The early monopoly of government-backed institution was broken up post-1990 in the liberalization era with the entry of a large number of private players. But the real push came in post-2000s, where retail participation started increasing, which resulted in a rapid expansion of the mutual fund industry. Now, before we move on to other features of mutual funds, let's first talk about the most important factor in any investment, which is the safety and regulatory protection around that investment product. In this aspect, mutual funds are amongst highly regulated financial instruments. In India, all mutual funds are regulated by Securities and Exchange Board of India, SEBI. SEBI is responsible for establishing rules and regulations governing mutual funds, ensuring investor protection, and mandating transparency and disclosure requirements. Next, let me take you through the structure of mutual funds in India. Indian mutual funds follow a 3-tier structure comprising of, first, a sponsor. The sponsor is the initiator or promoter of the mutual fund. They play a foundational role by setting up mutual fund trust and appointing the trustees. Next come the trustees. The trustees are tasked with safeguarding the interest of the investor, acting as the intermediary between the investor and the AMC. They oversee the operations of the mutual fund. Next comes the most important clog of this wheel, which is the asset management company. The AMC is the core entity that manages the mutual fund's investment. It is responsible for day-to-day management of the fund, including research analysis and investment decisions. All 3 entities work within the overall regulatory net of SEBI. For example, if I talk about HDFC mutual funds, the sponsor is HDFC, the trustee is HDFC Trustee Company Limited, and the AMC is HDFC Asset Management Company. Moving on to the most important area of every investor's interest, the returns. You earn return from mutual funds in 2 primary ways. The first is capital appreciation. As the value of the underlying investments grow, the NAV of your mutual fund also increases. And secondly, income distribution through dividends. These are specific to specific distribution schemes of mutual fund. But at this point of time, it is very important to understand that mutual funds are market-related instruments and thus do not offer any guaranteed returns. When the market rises, your investment value also increases. And when market is falling, your investment value may also temporarily decline. And this is why a long-term strategy helps investor create wealth through the power of compounding. This is it for this video. If you're serious about learning more on mutual funds investing, make sure you keep watching this series. And if you're looking for a smarter, more structured way to choose the right mutual funds, do log in to Wall Street Invest and start your mutual fund investment journey with just one click.